if the money supply is too stagnant and money is hard to get in the future, then it's going to be almost impossible to pay the loans off. And what that's going to lead to is default, which is something that nobody wants, right? Because that tends to result in economic catastrophe. So gold has a very nice feature in that its supply increases by about 1.5% per year relative to its above ground stock. But even that was a little bit too hard for the credit system to be able to withstand. Back in the 19th century, when we were using a bimetallic standard, one of the nice things was that silver actually increased in physical amount faster than gold did. I believe it was usually between 3 and 5% per year.
And they refer to that demonetization of silver as the crime of 76, correct?
1873.
Or the crime of 73. There you go. But see, and that's my point, is that any of this stuff, any of these, what we're talking about as stores of value, could be interchangeable with currency if we wanted them to, at a floating price, the way you're thinking about it. The question, I think the bigger question, and maybe we just disagree on this, is I'm not so sure, like, because what I'm hearing out of you is almost that we need a fractional reserve system. And I'm not 100% we might, I'm just not 100% sold on that, where you've got to be able to increase the money supply by giving out loans. I'm not sure that that's necessarily the way that we have to distribute new money anymore. Like,
I don't like the phrase "giving out loans."
Yeah, taking out loans.
People will take out loans in order to have the funds to invest, so that they can increase the productivity of the world and then pay those loans back in the future. That's assuming that that's their intent, to pay back those loans, which I know that the federal government doesn't ever intend on doing.
No.
but private businesses certainly do. And one of the reasons why the money supply tends to expand is that the banking system allows people to borrow based upon their credit, so that they can invest and then pull some of their future consumption into the present to invest in working capital, which can then produce goods and services and eventually pay down those debts.
Yeah, but I think that I don't necessarily think that doesn't preclude, like, I'm not, if Bitcoin or gold were the only currency you could use, then yes, you're correct. But I kind of like this idea that there's room for so much more than that. So, I mean, you could have systems where you're creating other currencies, like what central banks are talking about right now, the way they want to bring in digital currencies where they'll create their own on a public blockchain network like Ethereum, and they'll be able to issue that as much as they want, just like they always have done. Mm-hmm. But it's floating side by side with Bitcoin and gold and all this other stuff that you and I would consider hard money, stores of value. Not necessarily that you consider Bitcoin a store of value, but you know what I mean with that, where I don't necessarily think that we need to grow the money supply the way we have been. I kind of see the entire crypto space as the way the internet was back in the early 90s, where no one really thought about, like, this is going to change. Well, very few people thought about this is going to change publishing, broadcasting, all the way we consume and information and pass information between one another. It changed all of that. And I kind of feel like that's what cryptocurrency is starting to do on top of the internet with money in general. There's room for stuff with counterparties. There's room for all of this is just a technological innovation. And the reason Bitcoin's at the core of it is because it was the one that was created as the store of value. When you talk about it, the difference between one of the concepts that Aristotle had for a store of value was established history. And gold, one of the reasons I don't think gold is ever going to go away is because it's always going to have a 3,000-year lead on Bitcoin that way. Mm-hmm. But in that same sense, Bitcoin has a lead over every other cryptocurrency. And it's only 3 years or 4 years in terms of technology, or in terms of like the time frame. But in terms of technology, that's a huge difference. And the fact that you're talking about this stuff as being able to provide that store of value, once you get into that, the world is moving to being more digital, it starts to make more sense to look at this as, these are different recipes, and there's competition within it, but you can't at the end of the day have something that's that just is unlimited creation by one central party and expect it to work.
Oh, yeah, I agree with you. I agree with you. The point I was trying to make was, there are credit markets that are popping up locally that will allow you to lend your gold in exchange for a return. Now, you have to put your gold on deposit somewhere and actually allow somebody to lend it to somebody. But I personally would never lend out my gold because I know that gold is a very, very hard money. And there's a pretty good chance that whoever lends it out isn't going to be able to get it back. And if that happens, I just basically risked all of my gold for a small profit. And the reason why I don't participate is because gold is a very hard money. And I would venture to guess that if Bitcoin is a harder money, that it wouldn't make sense to lend it out either.
That's funny that you say that, because I actually, that's been in the crypto space. That's one of my favorite, a couple of my favorite projects are just based off of that, because I see, loans, credit, debts, they're always a part of human civilization. Like you said, we need them to advance forward. People need to be able to borrow money, to pull capital, to be able to build things. So I don't mind, actually. I have a smaller percentage of my portfolio in crypto that's actually earning interest by trusting a third-party counterparty. Not anywhere close to all of it, but I kind of, part of it for me is wanting to see those companies succeed. They've been really good to me so far, but yes, I do know that, like, if my bigger fear in terms of them not giving it back, because I know what they're doing with it, my bigger fear would be the government coming in and just taking a cut of it all because the price appreciates too fast, or they have some new law that they want to put in effect that makes it outlawed. But I kind of think that that's how banking should work, is the whole point of the banks were that they used to beat out inflation for you, because if you're saving in the dollar, you're saving in a depreciating asset, but the bank gets to make money off that dollar. When you put that $100 in, they can loan out more than 1,000 against it. So if we want to see the same types of things happen with what you and I would consider to be hard money, then that's what's going to increasingly have to happen. Is, to me, that would be the real shift is bank accounts in dollars don't earn interest anymore. But if you get one in gold or you get one in Bitcoin, now all of a sudden you can earn 6%. It's not going to be long before people who are earning that in an asset that's also appreciating are going to be telling their friends about it, and boom, you suck all the capital away from the old system and into the new.
I'm going to very quickly make a correction, because something that you said, I think, is a misconception that a lot of people have, that, when you put $100 in the bank, that bank can then lend out $1,000. That's actually, I mean, mathematically, that's how the banking system ends up working, but the individual banks themselves don't work that way. So let's say that you put $100 in deposit into a bank, and suppose that that bank has a 10% reserve requirement, meaning that they have to keep 10% in their vaults just in case you come back and you demand your money, or they can then lend out $90, right? And then the people that are on the receiving end of that currency, the people that have borrowed that $90, then put that money deposit in their accounts, and those banks can then lend out, let's say, $81 out of the 90 that is on deposit. And as that happens over and over and over again with a 10% reserve requirement, it tends to multiply the amount of loans outstanding by a factor of 10 to the amount of capital that's in the system. So this one.
Yes, that's. Yeah. So the effect of that, though, is the same. But
yeah, the effect is the same. That's right.
And that's my point. Is if no one's earning interest anymore in dollars and everything's now settled eventually in a hard asset, you kind of take away a good bit of the ability for those types of over leveraged shenanigans to happen. I mean, isn't that kind of what in terms of gold, isn't that something that like a lot of people have wanted to see in gold for quite some time, that the way that it's manipulated through the paper gold market, that system starts to change and become more honest, and that the only way that would happen is if enough people took physical possession of it. In that same sense, I kind of think that's what you're talking about when you talk about any of this is, what is the real world value of the money, the currency that we're transacting in? Like, what is it ultimately settled in?
Well, it's not really settled in anything other than faith at the moment, right?
Exactly.
I get my paycheck, twice per month, and I take it on faith that I'm going to be able to use that cash to buy the things that I want, roughly for the same, amount of currency that the goods and services cost me a month before. But I have no faith that 10 years from now, the same amount of currency is going to be, accepted in exchange for the same basket of goods and services. Right? I know better. Just the same, I still use those Federal Reserve notes, and I still, will make short-term loans so that I could generate enough interest to counteract the, price depreciation over time. But, I'm not going to, keep the majority of my savings in a Federal Reserve note or loans denominated in them.
You want something that has real value.
Well, I want something that has stable value, right? Defining real value is a pretty tricky thing because
that's true.
Real value to me is a little bit different than real value to you. If we had the exact same values, then I imagine we would be making exactly the same choices with our savings.
That is 100% accurate. Yes. That's interesting. I'm not as keen on the idea that debt has to be the way we have it today, or even how it's been in the past. But that's probably a much longer discussion at some point.
Yeah. But going back to the honesty of the gold system, I fully admit that there are short-term manipulations, and the culprit, I think, in the short-term manipulations isn't the fact that we have centralized storage of gold that is represented in terms of, electronic claims to ownership or paper claims to ownership. I think the big culprit in short-term manipulation is people who don't understand the role of gold in savings, and they use things like technical analysis in order to